Dear viewers, we are passing through a bad market correction. The correction which started somewhere in the month of September 24. We are in the middle of February now. It is showing no respite of stopping. Week after week, we see the markets coming down. Sensex, which was at 86,000, is at 75,000 level. Nifty, which was at 26,000, is at 23,000 level. Look at Nifty or look at Sensex, it doesn't look that bad. However, if you look at the indices of mid caps and the small caps, it is pretty bad over there. People are worried. People don't know what needs to be done. People are thinking, what shall I do to save myself today amidst this market correction? This video is for all those people who are disturbed because of this market correction, not knowing what need to be done. This is a guiding video for you. If you follow me till the end of this video, I've discussed various case scenarios, various possibilities. I've learned from the history and I'm telling you what are the possible things you could do and save yourself. This is NRI Money Clinic for you, and I'm Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Nivesh Desh Videsh 2025, organized by NRI Money Clinic to celebrate the completion of 5 years of knowledge sharing and gaining on 21st and 22nd February 2025. Watch it on Zoom from anywhere in the world, or watch it live or at your convenience. Learn from the wisdom of experts. Dive into the world of experience of maestros of investment industry and explore opportunities to invest and discuss. Be enlightened on engaging in contemporary topics such as mutual funds, alternative investments, annuities and cash flow solutions for retirement, fixed income solutions in INR and dollars, solving the NRI dilemmas, investment opportunities from Gift City, NRI taxation, USD investments for NRIs, smooth transfer of inheritance. Hear from our distinguished speakers from around the globe. On the keynote address, we have Mr. Navneet Manot, MD and CEO, HDFC AMC. Dr. Dipesh Shah, Executive Director, International Financial Services Center Authority, Gift City. Mr. Gop Kumar, MD and CEO, Axis Mutual Fund. Mr. Akhil Chaturvedi, Executive Director and Chief Business Officer, Motilal Oswal AMC. Mr. Amit Pibalkar, Founder Director, Sapient Finserv Private Limited. Mr. Ashish Somaiya, ED and CEO, White Oak Capital Management. Mr. Rahul Prasad, CEO, HDFC International Life. Mr. Sudarshan Lodha, Co-founder and CEO, Strata Capital. Mr. Saurabh Bhatia, Head of Fixed Income, Sapient Wealth Pune. C.A. Sriram Rao, Partner, Nitin J. Shetty & Co. Mr. Jatin Popat, Founder and CEO, Viljini. Mrs. Elizabeth Roy, Head, Product Management, ICICI Prudential Life. Don't miss this golden opportunity to listen to the stalwarts in the field. Mark your calendars and register now for this wonderful event.
Dear viewers, we are passing through a deep correction. There is no doubt about it. Normally, the corrections will be sub 10%. We call them as grade 1 correction. Corrections between 10 to 20% generally are termed as grade 2 corrections. And if it's more than 20%, it is said to be a grade 3 correction. All types of corrections are very common. Grade 1, which is below 10%, is absolutely a normal occurrence. There is nothing to be worried about there. Grade 2 are quite rare, but compared to grade 1, they are quite rare. However, when you look at 2-3 decades of history, they occur at regular intervals of time. So nothing to be too much worried on that particular front. However, grade 3 are definitely rare. They do occur at regular intervals of time. Of course, you cannot predict, but once in 5-6 years, maybe once in 10 years, they will occur. So it's not something which is unusual. But this correction, what we are observing today, appears slightly different. It's different because of its nature. It's different because of its reason of occurrence and the reason what might happen going forward from here. The first thing, in my personal opinion, if we look at the main indices, which is Nifty or Sensex, this appears to me like a benign correction. A benign correction is a correction which may not damage you to a great extent. I am referring here with respect to the large caps. The correction, whatever that is happening in the large caps, appears to be quite benign. So it will pass over a period of time. It's not something to be too much worried about. Why large caps have corrected? Because of FII pullout. It's not that there is any shortfall in supply of money from the domestic sources. It is the FIIs who have pulled out. Why FIIs pulled out from the large cap? Because they mostly invest in the large caps. They don't invest to such an extent in the small and mid caps. They are not interested in that. They are more interested in the large caps. Since they pulled out, the markets have corrected. Even before the markets corrected, the valuation of large caps was not that alarming. It was just slightly above the historical mean level. So from there it came down. Today the valuation of the large caps are very, very reasonable, or almost on the average historical mean level. So it's nothing to be worried about. Category wise, it could be categorized as grade 2 because it has corrected now by 12 to 14% depending on what day we observe the market. Mid caps and the small caps have a different story to tell. The mid caps have corrected almost up to 20%. It's in the vicinity of 20%. So it is showing signs of grade 3 correction. The small caps on the other side have corrected more than 20%. And it is showing the signs of capitulation right now. So you can safely say it is grade 3 correction. The general public is mostly invested in mid caps and the small caps. They got carried away by the kind of returns the Google was showing with respect to mid and the small caps, and they completely negated the idea of investing into the large caps, and they came mainly into the small and mid caps. That is why they are correcting quite high, and in my personal opinion, they might correct much more than what it is being seen right now. Now the Nifty small cap index, which peaked at about 20,000, is quoting somewhere in the region of 15,000. Nifty mid cap index, which was quoted at 17,000 at the peak level, is quoting somewhere in the region of 13,000. So it's a deep correction when it comes to question of these two indices. So when I evaluate this market correction, as I said, it looks to be a benign correction. Why it's a benign correction? Because the large caps corrected not from a distressing valuation. They corrected from just historical mean plus a little bit, and from there it corrected. There were no reasons within India which created this particular problem. The main reason why it corrected is because of reasons outside of India. The main reason is arrival of Trump. The winning of Trump has set in motion a structural shift in the US policies. You have heard about the tariff war, the way Trump is trying to redefine the economic history of US. This is making the dollars which are spread across the globe are coming back. Dollar is getting strengthened. So this creates a kind of opportunity for the smart money to make money in the US. Therefore, they are pulling money from rest of the emerging economies. It's just not the emerging economies. Even from the developed economies, they have pulled out money. So they have made a colossal amount of money in India. So they thought, it's good time, let's book that profit and move to the next pasture where I can make money. So therefore, this correction has nothing to do with anything that has happened in India. You can't say that, okay, this was wrong, because of it there is a risk here. That's why the market's corrected. That's not correct. This observation is with respect to the large caps, the economy in total. However, when it comes to question of mid caps and the small caps, the valuations were undoubtedly stretched. So it's just a matter of time they had to correct. So the correction what we have seen is quite deep, and I can say with my experience that there is more correction that will follow, particularly in small cap and the mid cap, and there is more pain which is in the offing. India is also passing through a cyclical slowdown. It is not a structural slowdown. Cyclical is, it's just like winter, summer. Sometimes it hots up, sometimes it cools down. Structurally, something basic, fundamental changing in India. There is nothing which is happening. Actually, the structural shift is happening for the betterment. Now you have seen in the budget now how the government has given income tax rebate, various benefits given to general publics, government spending. All these things are something which is positive to the stock market. The cyclical shift is people have taken loans, they are taking time to come out of it, they don't have money to spend, companies could be seeing the revenue growth getting muted. All these things is resulting in a cyclical slowdown. So the higher valuation in mid and small cap, cyclical slowdown, and the opportunity outside of India, which is in the US, has resulted in this particular correction. So as an investor in the stock market, what is that you should do? I understand people get disturbed. It's not easy when you see portfolio valuation going down day after day, markets falling down, not stopping. It disturbs everyone. The first thing that we have to understand is you have to calm down. That's the most important thing. If you get disturbed, your thinking gets clouded. Remember one thing, this is not the first correction, nor this is going to be the last correction. I'm in the market since 1986, literally now closer to 4 decades now. I have seen tens and tens of market correction. I was just going through the history of the stock market. One of the researchers told me that in the last 30 years, markets have seen 45 odd correction. So every of these corrections have recovered. So there is nothing to be worried about. You have to manage the time. So you can't say that markets have to correct tomorrow or next week or next month. So when markets correct, they take their sweet time. Generally, it takes about anywhere from 6 months to 9 months or maybe more also. But they will not make you wait for too long a period of time. They will recover. So there is hope at the end of the tunnel. It's always pitch darkness before it's dawn. So understand this and you stay calm. One another thing you have to keep in mind is more the markets fall, more the value it builds up. So markets corrected because they were quoting value plus. Their value was not in sync with what it should be really quoting. When the prices fall, that means they become meaningfully valued. So the more it falls, the lesser probability of it is going to fall further on. It's not a guarantee that it will not fall on, but the chances of falling further comes down with every fall. So it builds value. There is also another phenomenon that happens simultaneously. If markets do not fall, or if it falls and stays there for a longer period of time, it doesn't fall down, it doesn't move up, it stagnates over there. What happens? Again, it builds value. Now let's say that the Nifty, which was at 26,000, is quoting at 23,000. It's about 12-13% correction. And let's assume it will remain at 23,000 for next 6 months. What happens? It builds additional 5-6% value. How does it do it? Simple. Economy would have slowed down, but economy is still growing. If economy was growing at a nominal terms of 12-13%, the slowing could be for 10-11% or 9%. Even then, every 6 months, its valuation jumps by 5%. So markets are stagnant, economy is growing, therefore the value picks up. When the value picks up, it becomes a compelling case for people to invest the money. Who will come and invest at that point of time? It is the institutions, it is the smart money, it is the knowledgeable investors, it is those investors who are well advised by the financial advisors who understand the valuation. They are the first one to come and put money in bulk. So market remaining stagnant for longer period of time is not a bad news, but it's a good news. Markets falling deeper and deeper is not a bad news. Market is falling is a good news. So when you start understanding this without any emotions, with your logic in mind, then you start feeling very comfortable. Once you feel comfortable, you will not take those decisions which might harm you. If you are a very knowledgeable investor, or if you are well advised by professional financial advisors, you have nothing to worry about any of these market corrections. You just don't have to worry about. It's a routine occurrence, and don't look at what's happening today. It is best you don't watch the television sets, you don't watch the newspaper, don't listen to any commentaries. Close your eyes, close your ears when it comes to question of market news, and over longer periods of time you should be fine. You should not be asking what happens to the market tomorrow, next week, next month, next year. Don't ask these questions. It's immaterial. You should only ask, where will the market be 5 years from now, 10 years from now? Obviously, the market will be much, much, much higher 5 years later or 10 years later. You may not trust my words. There is a way you can find out what I am saying is right or wrong. Simple. Take any reference here. Now we are in 2025. Go back 5 years and find out where was the market. Go back another 5 years, 2015, and see where was the market. You don't have to take 2025 as a reference here. You take any year as a reference here. Let's say 2022, or let's 2018, or let's say 2013. Always look 5 years before, where was the market? 10 years before from that, where was the market? You will not find one single incidence to say market was much lower today than what it was 5 years or 10 years later. This is a guarantee for you to say that if you stay invested for a longer period of time, your purpose of investing, making money out of the stock market, beating the inflation, getting a better return than your fixed deposit will be achieved with effortless ease. So do not focus on what's happening in the market today. Focus on what might happen in the market 5, 10 years later. That's the right approach an investor should take here. Who should be worried in the market correction, what we are seeing today? If you are somebody who is a very young investor, you have come into the market for the first time, you have no experience, you are 100% invested in mid and small caps, thinking that you will make the 30%, 40% return year on year, make no mistake, it's a bad news for you. There is more correction that will happen in mid and small cap. By all expectations today, this is likely to happen. I'm not God. I'm not saying that market will listen to my command and it will behave as I say. Market can do anything. Market can move up from here. That's a perfect possibility. Don't hold me responsible for this. But when I look at what's happening today, even after the more than 20% correction, I will show this valuation of the small and mid caps as it exists today on the screen here. You look at it, you will be surprised to see still they are highly overpriced. So there is more correction which is likely to follow in the small and the mid caps. And when the mid and the small caps fall down further, there will not be buyers because the institutions don't buy them to a great extent. It is the general public which buys into it. So general public is already stuck with fears. They will not buy anymore. Therefore, you see the small caps, mid caps falling more than the large caps. If large caps fall, there are people who come and buy, there are institutions who will come and buy. Whereas it's not the same case with the mid and the small caps. So they don't find buyers. As a result, they become extremely volatile. They may fall much more than any other, like the large caps or other indices there. So it's a bad news for you. Likewise, when the markets revive from here, it is not the small cap and the mid caps which will recover first. It is the large cap. How does another bull market start from here? It is the institutions which will come. What is that they are going to buy? They will come and buy the large cap. So the first up move will start coming from the large caps. When they start becoming richer in valuation, then the movement in mid and the small caps starts. Therefore, if you are invested in only mid and small cap, it is time you revisit your investing principle. One, you could take the help of an advisor and see how best you can invest. Two, you should learn the art of asset allocation. How much money should be there in the large caps? How much money should be there in the hybrid? How much money should be in the mid cap? How much money should be there in the small cap? How you should manage the risk? You should start thinking if something were to go wrong, how much it will impact? Do I have the ability to withstand that kind of a fall? How much money should I hold it in gold or debt? So you should learn the art of building scientific portfolios today. If not, this you can become Tenali Ram's cat, somebody who came into the market, got bitten very badly, and for the rest of your life, you may not come back to the stock market. However, if you are invested in the mid and small caps and you have unlimited period of time, I have 5 years, 10 years period of time, you continue to buy in this market, probably you will come back. You will come back. It takes time. It may take time. It may not recover as quickly as possible, but still it will recover. But if you are a person who is invested in small and mid cap stocks, I cannot dare say that your investment in these small and mid cap stocks will ever recover. That's a distinct possibility. That's because we do not know which stock you have picked up. What is the underlying in this particular stock? Is it a momentum stock? It has been rigged up. Is there a real value in it or not? Is there a business behind it or not? Is it the operators who have moved it? Why did you buy it? You could have bought it just because the price is moving up. You don't know how a stock has to be valued. You don't know how the stock has to be picked up. You could have simply picked up. You could have picked up a junk, and when the flood comes, the flood lifts even the junk. Therefore, when the flood recedes, the junk may get washed away permanently. So if you are somebody who has bought the stocks, then it's time. Go to somebody who is really knowledgeable, a broker or a SEBI registered investment advisor, or anyone who has knowledge about these stocks. Get these values, get an opinion, and take a decision. Should you stay invested or should you exit them? If you have to exit, you have to do a surgery, and you should think that it's a bad dream and forget it. So if you are in a small cap, mid cap stock, you just can't rely telling that the markets will recover, I will get back my money. I can't say that would happen. There are a lot of people who have invested in unit linked insurance plan. Chances are that your ULIP plan could be maturing at this point of time. You would have purchased it 5 years before, 10 years before, 15 years before, but by a strange incidence, this plan is maturing now when the markets have deeply corrected. What shall I do? The answer to you is, you have nothing to worry about. ULIPs per se are not that bad plans as made out to be. I've done countless videos to tell you it's not that bad plan. Before 2010, they used to be bad. Post 2010, the regulators have brought down the charges in that. They have become quite attractive today. If your plans have matured today, you don't have to walk out of the money today itself. There is something called a settlement option in every ULIP policy. It is given as a provision by the regulators. That means markets have corrected now. If you walk out of this today, you will get lesser money. So what you can do is request those companies to extend the maturity of this plan by another 5 years. You can withdraw this money over next 5 years. One portion today, one portion next year, one portion third year, fourth year, fifth year. Like that you can take over a period of time. That's a perfect possibility. For those people who are invested in ULIPs but they have not matured and you are worried that the valuation have fallen down, what shall I do? There is a dirty advice which will circulate now, telling that you are in the equity, markets have corrected, you have to move your money from equity to debt. That's 100% wrong advice. If you are in the equity, as I said, stay in the equity only. Do not move out of equity today. If you move out of the equity today, what happens is at a lower valuation, you go and locked into the debt. So you will not ride the upcycle again. So do not do the mistake of exiting from the equity and go and sitting in the debt funds. Please do not do that. That's a wrong advice. Just forget about the market. Your plans will mature at some point of time in future. What is happening today is volatility. It has nothing to do with the losses. Stay wherever you are. Likewise, those people who are running the SIPs, because markets have fallen down, many people think I should stop the SIPs. I was going through the AMFi data. I was surprised to see the amount of SIPs which have been stopped post-September was mind-blowing. This is again a 100% wrong thing. See, if you are buying in the market, when the market comes down, the market is helping you, whereas your thinking gets clouded because of your emotions and you run away. If there is something which has come into the stock in the malls and it says there is an offer price, you go and buy all that. Whereas when there is an offer in the stock market, you stop buying. That's again a wrong thing to do. So if you have the money, buy something like a large cap or buy the good blue chip companies. You do any of these things. But stopping SIP is 100% wrong thing. If you want to increase your SIPs, that's perfectly fine. But for heavens, say, do not stop running SIPs at this point of time. That's grossly a wrong decision you will make. There are people who have taken loans. They have taken loans and they were expecting markets will do very well. I will clear the loan. All kinds of a situation could be there. Or people could have just taken the loan and invested in the market. It's a tricky situation to be in. If you wanted to exit the market and clear the loan, you should have done it long back. But today, if you exit the market and clear the loan, then make no mistake, it's going to be a permanent loss. I do not know what kind of a situation you are in, how leveraged you are, how much you have borrowed from your friends, relatives, pledging the gold, pledging the properties, whether you have bet this money in futures option. I do not know. You should take a call on your own. But if you are just somebody who has a regular loan kind of a thing and it's okay to carry forward the loan for next 1, 2, 3 years, you should consider that, because I don't think this market will take longer time to bounce back. As I said, this is quite benign market correction. It is bound to move up. If you can manage time and allow your investment to remain as it is, probably markets will give you more than the interest that you pay for the loan. But a decision has to be taken depending on the situation you are in, but don't take a decision based on emotions. Take a decision based on your compulsions. Those people who want to shuffle your portfolios now, I'm invested in 100% in mid caps and 100% in small caps, or most of my money is in the mid and small cap. Can I remain here itself, or can I shuffle the portfolio? One suggestion probably you could consider is sell a portion of your mid and small caps and move it to the large cap. What will happen in that case? Number one, instead of being in a very volatile section of the market, you will move to a more stable section. Likewise, when the markets recover, it is the large caps which will recover first. So you will feel very comfortable when the markets recover. So it's a good practice to be in. But nevertheless, please do not consider as my advice here. I'm not supposed to give you any advice over the video here. You need to do your due diligence. You need to check your risk profile. You need to know what suits you the most. Consider taking opinion of your brokers, your financial planners, and take decision which is in your best interest. So whatever I said here is from my experience and it is not an advice. People who want to invest today, I will say this is the best time for you. You could be an existing investor, or you could be a new investor who want to invest in the market today. This is the best time because markets have come down with the risk. They have already corrected. They are spending time here. Therefore, they are building value. It is becoming more and more attractive today to buy into the market. One can safely buy today. You can put money through an SIP or through a lump sum, you can do. But one thing I would like to say, you should learn the art of building scientific portfolios. You should have proper compartments in your mutual fund portfolio. Just because a fund gives you high return, you should not be committing a large chunk of money to one sector fund or only the small caps or mid cap. There is a way to build your portfolio. For those people who don't want to go through a financial planners, probably one good suggestion that you might consider is invest in the large caps. So when the market recovers, it is the large cap funds which will recover the first one. Therefore, it appears to be quite safe. Nevertheless, for those of you who want to invest in the market for a longer period of time, you want to build portfolios in a scientific way, you need professional handling all throughout. You don't want to focus your time on looking at the market, what's right, what's wrong. You need to be advised, you need to be taken care of. You can make best use of services provided by NRI Money Clinic. We have experts on the ground. We ourselves are the mutual fund distributors. You can reach out to us and we can help you. How you can reach out to us? Very, very simple. Our number is given in the description box below. Go and click on a link there which will take you to the WhatsApp and send us an explanatory message, and our team of experts are ever ready to help build those portfolios for you to reach your life goal based on your risk profile. Why delay? Send that message right now. By the way, a personal request with you all. Our channel grows when you subscribe for the channel. Our channel grows when you share your opinions, comments, feedback in the comment section. Please subscribe for the channel. Please drop your comments, observations, feedback in the comment section. Please do not forget to like these videos if it really helped you. And finally, for those people who are really crying, made bad decisions, bought wrong stocks, really lost money, had no withstanding ability because of the loans that they have taken, you have to walk out of the market, out of your compulsion. I would say it's bad luck. You can learn, and you can learn from my experience. I have been in the market since 1986. During my early years, I came into the market when I was just about 24 years old, and I burned my fingers so badly in 92 during your Arshad Mehta scam. I was running away from the market till I met one person, a very learned person, who said, do not run away from the market. If you have lost money in the market, the right place for you to search for that money is in the market. You have spent time in the market. Market has taught you a lesson. You are an experienced investor. You are an investor who has lost money. Now you know what doesn't work. Don't let go this experience. Don't become Tenali Ram's cat. It's a bad experience. You have a long life ahead of you. Make this as a lesson of your life and become a seasoned investor beyond that point. There is always a hope. Don't think you will lose money. In fact, if you follow the rules and regulations, you work with a professional financial planner, it is impossible for you to lose money in the stock market. That's 100% conviction that I am giving you. So dear viewers, before I conclude, a request, please do share my videos, and I'll see you next week with yet another episode of Your Life, Your Money. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.